So this is what on a candlestick, a retracement, and then the resuming, in this case, the break. So here's the move. Here's the retracement. It's going to stop here, and it's going to, at some point, resume this move of weakness, right? It's going to look like that. When we put it under a microscope, how could we, in real time, get on the team and take advantage of getting short at resistance? Long at support, short at resistance. Well, we had a couple things happen. We want a green laser. Okay, that's over here. We'd like to see either a blue breach or a pink triangle or both. So you're rejecting a buy imbalance and you're getting a sell imbalance in the same spot. So let's even bring it back in more detail. And you get the blue. Okay, that's good. Now you get the opportunity for it to breach, but you don't know if it's breaching just yet. What you do know is the laser goes green right there with the pink. Now I'm going to tell you, it feels like you're reaching because we just ran up there. You're going to want, you're going to feel like, oh, I could be short way up here. And so this is going to feel like you're reaching, and that's fine. You don't necessarily have to get short here and risk all the way to up here because now you have this as being the area of where you want to keep price at or below. But you have a trigger that gives you an opportunity to catch this subsequent move. Again, the problem is you're going to feel like you're selling it too late. And it's always that, you hear from people, they have the fear of missing out, but then they also have the fear of missing, not just missing out on the move. And so they reach, and then they have the fear of, oh, I should have sold it earlier. Then you come to the realization after you've been doing this long enough is you're going to have to deal with that all the time. You can't allow it to be called fear anymore. Because once you call it fear, well, how are you going to react well if you're afraid? You're not. You're going to have to default to some training and say, I'm going to be wrong sometimes, but here's where I'm wrong at. This is my trigger, and I'm going to also be right a lot. So you tell yourself the story of what you're looking for this market to do. You're visualizing what this chart's going to look like before it looks like it, and then what it would look like if you're wrong, and then not be surprised by either outcome. You're just stacking probabilities. All right. So then if we fast forward, we get a similar bounce off the red PWAP and down. And there was a couple spots. If you look back, it was a little bit right there and then right in here. Well, let's take it under the microscope on the chart here on the right. Take a look. This is what it looks like. It's banging off the red. You get a pink that might get you in, but you get the transition red to green. Why do you want a green laser? Because that's saying sample size of other people's positions, more longs than shorts. And when you get more longs than shorts, you get more future sellers than buyers. I'll bring it back. Was there a trigger in here to get you to sell off of potential resistance? The red dotted line's resistance. Pink triangle is showing some sell imbalance. You want to wait until you get, instead of more shorts, you get more longs. We go back to this all the time, that if you know that longs equal future sellers and shorts equal what? Future buyers. If you're short, not only what do you want, what do you need for this to happen? You need future sellers. How do you get future sellers? You get present longs, and you get more longs than shorts. It's always the relationship. All right. There's always a relationship. It's not just how many longs and it's not just how many shorts. It's how many longs versus shorts.